Good morning, good afternoon, good evening, wherever and whenever you are. This is the live trading workshop of tradingindicators.com. Welcome, guys. It is August 28. The summer is nearing an end, at least for those of you in the northern part of our planet. A few more weeks left, and then the bitter winter will start. But nonetheless, a great time for having yet another live trading workshop. My name is Daniel, and I will be your moderator today. And I will be joined today by Nicholas, as always so far during these live trading workshops. Nicholas will be doing most of the charting analysis. I will chime in here and there, and together we will decide on which trades or trade setups we're going to try to trade this morning. All right, so I'm actually greeting you guys from my home country of Germany today. And the beauty about trading is that you can really do it from wherever you are. So I'm, sitting here at a beautiful region next to the coast of the Baltic Sea. It's a beautiful day, around 30 degrees centigrade, blue skies. What could be better to enjoy your day with a bit of live trading? All right, so let's get started. Of course, a quick reminder that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or anything really based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trades and trade setups and strategies discussed in this webinar should not be construed as trade advice. These are for informational purposes only. All right, so it is 5 minutes past 9 a.m. The market is going to open in about 25 minutes. And of course, we're going to lead up to this and we're going to start trading only when the market opens. So allow me just a few minutes for those of you who are joining us for the very first time to introduce ourselves. So we are tradingindicators.com. As mentioned, my name is Daniel Sinnig. I'm the guy here on the left-hand side. And today I am also joined by Nicholas. Well, Nicholas has been instrumental behind most of our trading indicators, especially Liquidity IQ and ME-Rush, two of the key indicators we're going to use in today's live trading sessions. Nicholas has used these indicators to pass numerous prop trading challenges. And today we're going to attempt to see what the market offers us using our live trading account with Interactive Broker. So this is not going to be a prop account. It's a regular live trading account. Most of what we will do will be rooted in technical analysis, which is basically a mathematical analysis of your price chart using some manual techniques, but also, of course, some of our indicators, namely Liquidity IQ. I'm trying to keep it simple. I'm going to share with you of what we consider as significant on the price chart and what might be considered as noise. And of course, guys, if you have any questions, please make this session your own. Ask as many questions as you can. Put those into the Q&A box. And Nicholas and we will keep an eye open for these questions. And we will address them as we see fit. And there's the first question already came in. Christian wants to know, what are we going to trade today? Well, great question. Actually, the next slide will cover this. So we will be doing what is called day trading, like short-term trading, because we have 90 minutes scheduled for this session. And we're going to try to open, but also close trades within this time frame. We will mostly trade futures. Now we're going to look at the main futures like ES, NQ, but also oil and gold futures and perhaps some other ones if we see some interesting setups. And should we see some stocks which have interesting moves this morning, we might also dabble a little bit into day trading some equities. All right. So if you're not a day trader, don't worry, because the techniques and strategies shown in this webinar, they can be applied to any type of trading. So whether you are a day trader or a swing trader or perhaps an investor, the concepts are transferable. We will also use TradingView today. because it is, by far the greatest common denominator. Chances are most of you have traded with TradingView before, and you can relate to this problem to this platform somehow. This is why we'll be using TradingView. But don't worry, if you are a Ninja Trader or Motive Wave, don't worry. These concepts that we will be showing you on TradingView, these are transferable as well. And of course, we will be taking live trades, and these have to fit into this webinar. And as such, we might be forced to take some trades where not everything lines up. We're going to announce this as well. Hey, this is a trade that, possibly we would not take normally because not all factors come together. But for the sake of this trading session, we will take this trade because it has still a chance to succeed. But just keep in mind that not all the factors are lining up. But since we want to take some trades in this session, we may have to force some trades at times. All right. Now, are we going to win every trade? Maybe, but maybe not. There's no such strategy which will guarantee winning every trade. If somebody tells you this, he is lying to you. But what we will do today is we will do everything we can in our power to increase our odds of winning trades and having winning trades. Of course, why wouldn't we? So for this, we are going to use techniques from multi-time frame pivot analysis. This may sound very complicated, but in fact, it's quite straightforward because our liquidity IQ indicator does exactly that. We will look at support and resistance zones. We'll do a trend momentum analysis to make sure that we are always trading with the trend as much as we can. We're going to use risk management, of course. And we're going to avoid any major market events. This is some periods of the markets where we do not want to be in the market when it comes to day trading, because volatility may be very unpredictable. Market moves may be very unpredictable. And in fact, the first thing I'm going to do now is to check if there are any major market events happening this morning. So I'm going to switch over to TradingView. And there we go. And if you're on TradingView, you will see in the bottom right corner, you have this little calendar icon here. All right. And here you can see all the events that are happening. And we also have a filter here, this little filter icon, which allows you to filter by only significant events, or if you want to see all the events. So without the filter, we can see that we do have, let me just go down here, a couple of minor events. At 10 o'clock, we have the M3 supply event and the private bank landing event, but both of them have minor impact on the market. Besides this, there's not really much going on up until 10:30, where we have some crude oil news coming out. But in between 9 o'clock and 10:30, which is more or less the end of this live trading workshop, nothing major is happening. So that's awesome. So clear skies from this point of view. And oh boy, Nicholas, look at this one here. I'm going to talk about this symbol in just a second because something really interesting is lining up for gold. But let me just say one more thing before we're going to look at the charts. Is we have one fundamental principle which we're going to use today. And this fundamental principle is that every single chart has landmarks. And if we can identify these areas of price or landmarks on the chart, we can estimate how price will react to these levels of price and find trade setups in the process. So this theme of landmarks is something we're going to use throughout this session. And some of the trade setups that we can find this way is, for example, a magnet zone trade, or a bounce trade, or a zone break retrace trade, or zone break trade, or a breakout retrace trade. And let's focus just for 1 second on this very last trade, because market events just actually, as luck wants it, has identified such a trade for us. Look what happened here on GC. These are the gold futures. And, what has happened? We did have a zone break here. Price broke below this support zone here. And, often after a zone break, we see a retrace back to the broken level. So support was broken. And once support is broken, what does support become? Well, it becomes resistance. And look what happened here. Price retraced back into this resistance zone, and we may see a bounce off this level and this downtrend continue. And you know what? I do like this trade a lot. And Nicholas, are you there? Because Nicholas has, set up our trading panel. Nicholas, are you on the other end?
Can you hear me?
Yes. Hi. How are you?
Good. Yourself? Good morning, everybody.
Perfect. Yes. Good morning. And Nicholas, do you mind switching off or sharing your screen with MGC, not GC, on your chart to see if this also lines up on MGC? Of course, the micro contract and the mini contract, they are oftentimes almost identical in terms of price movements. And let's see what we can do here. Maybe we can, even right now, right off the bat, find a nice short trade, because this is something that doesn't come around too often. A trade where we do have bearish momentum. You can see MA rush here. It is bearish. We had the zone break and now a nice retrace. So let's see if this potentially could be a short setup.
Sure.
So let me stop sharing my screen and let's see what you see on your end.
Enable screen sharing.
Yes, of course.
Look at it's pretty much, unfortunately, just almost invalidated that. We'll see what's happening.
Yeah.
But I'm also kind of hesitant to be short on gold just because of how close we are to 25.50 and how bullish it is longer term. Let me just share my screen.
Yeah, unfortunately, we see like a very powerful bar powering through this zone. This is not what you want to see for a zone break retrace setup. You want, price to wick up into it, see a bit of a liquidity capture, which we did get while having bearish momentum. But of course, this trade now, doesn't look as promising. But one way how you could trade it, and of course, this would have, if you would have entered right at the market, this may not have been the best choice because price really powered through. But you can always wait until price, comes back down and see, depending on how big this move through this resistance zone now here is. If you see price to come down again, there's still time to enter if price, and should price go below the zone again. So let's see what happens here. So Nicholas, please.
Can you see my trading view, Daniel? And can you see my multiple tabs here?
I was just talking too much while I was sharing my screen, but I can see your multiple tabs and I can see your trading view. Yes.
Okay, perfect. So yeah, on gold, that really did look like a nice setup. One thing about gold though is when we hop over to like the 15 minutes, I think we were talking about this too at Lunch and Learn. Hey, there's even bearish momentum on the 15-minute, but it really is in such a powerful uptrend. It's kind of flattening out, so maybe it's still a valid setup. I want to look at it here on the 15 minutes, and I've got Liquidity IQ. I think I'll put it on the 30. It should have a similar level. Let's take a look here. And on the 15-minute, these boxes right here, the volatility threshold boxes, we call them, they are based on the chart time frame. So they get kind of wider and it doesn't look like as much of a blast through on this level. But right now, we have these multiple pivots. Also this level back here, 2535, but the key level right now is like 2538. We tried to break it and it didn't seem like that lasted very long. It could be a good short opportunity. Going into the open, I'm not sure if I want to risk shorting right now. We'd have a very small, a very small amount to lose, good reward to risk. However, we did already, even on the 15-minute, power through even the our liquidity capture box here, the volatility box. So I don't know what you're thinking, what you're thinking about this, Daniel, if we should or shouldn't. I think we should wait to go short on this. It's too strong.
I think we should not break our ground rules right off the bat. One ground rule is to don't take trades before the market open, because that volatility might always spike up and we're just heading into the market open. And things tend to be a bit clearer afterwards. So let's just wait. But if we do see a move further down, if this is not sustained, then perhaps, I would not mind entering short into this gold trade. But let's wait.
Definitely. And I just see right now, I think when I added in the box positioning down here, I added in a little mistake because we can see the second numbers after the decimal for the reward to risk and the stop overriding each other, so it's kind of hard to see. But even right now, it's a long bounce setup according to Liquidity IQ on most time frames, and that's probably not such a bad idea. I wouldn't want to go long here because we do also have bearish momentum. We really did bounce hard off of that resistance. We did just have a zone break, so it's kind of in a middle ground.
Yeah.
On oil, if we hop over to the 30 minutes on oil, we can see we are in a little bit of a downtrend. Let me put Liquidity IQ on a different time frame. And I like oil more for a short break retrace right now. So let's take this, wait till we get this on the 1 hour. That should be decent or even higher. We're on the 30 minutes. So we had that attempt to move over 80 back in April, a move down, and we've kind of been ranging between 72 and 80 to 85 essentially. And we recently had a really nice liquidity capture off of the previous pivots back here. But it is making lower lows. This low is lower than the previous one, and this low is actually lower than that one. And we can see that the frequency in attempting new lows is increasing, or the pace at which they're happening. We did set a lower high here as well. On this time frame, yeah, it looks like, even if we just did a simple little trend line right here, there could be a continuation downwards back to this support. But when we're over on our little day trading time frame, let's put Liquidity IQ maybe on to the 15-minute.
And Nicholas, I just saw a question come in. We should also explain our setup a little bit of what is the configuration of Liquidity IQ, so we can join along a little bit easier.
Yeah. Sure, yeah. So I'm not keeping the exact same thing on each time frame, but on the time frames we're trading, on the 5-minute, I'm either going to have Liquidity IQ set to the chart time frame, so 5 minutes on some of them, but most of the time 15 minutes or 30. And a lot of the time, if you have chart time frame on 5 minutes selected, the levels may be the same as they are in the 15-minute, but generally we're going to have it on the 15-minute or 30-minute, but there's no hard and fast rule. We're also just trying to find out which time frame gives us relevant levels, which reference time frame gives us interesting levels that we can trade right now. Because if we set it to the 30-minute and the nearest level is, a 9% move away, well, that's not really relevant for us trying to make a trade right now. So on oil, however, the nearest level below us, probably these two levels. So I'm looking at them back here, 74.20 and 73.5. We kind of had a bounce off of a little dip below 74. But I think this is nice for, even though we didn't technically have a short break signal, we had liquidity captures here at this level. So a lot of traders selling at the 75, 75.40 level before it broke. And now we're seeing that attempted retrace back up to there.
Yeah. Similar to the gold setup, a nice retrace up. I would like to see it go a bit higher to that zone and potentially also consider a short here. Yeah,
definitely. Yeah. And if we do go to, let's say, a replay, we know these volatility boxes are based on the current ATR. Let me just try to get this correct. Let me hop back here. I'd figure volatility would be a little higher here. Okay, no, we never came all the way back up to the zone. Yeah, I would like to see it come a little higher. This would be a nicer short entry, obviously, than right now. And right now, if we're looking at this being kind of a swing up, we're kind of near the nearest support of this swing up. So I wouldn't want to short now, but we'll see what happens at the open. This, I think, would be a good short range around 75, 75.4 or 75.3 to 75.5. So let's go ahead and create an alert, just so we're aware once it is entering into that range.
Yeah, and while you're at it, please also create an alert for gold. If should price drop below this support somewhere it's ranging right now, maybe to 535 or to 536 about.
Sure, yeah. Because even though we might get in a little late, that'll at least be confirmation that it's not holding the support so well.
Yeah.
So this should be 2.5.
And guys, what you see here is not a technique that we use all the time. We don't want to, keep staring at the chart nonstop. Instead, we're using the power of alerts to notify us if something of noteworthiness is happening. So TradingView will just give us an alert when this happens. And the cool stuff is, guys, I don't know if you knew this about TradingView. These alerts will work even if you're not even logged into your TradingView account. You will still get them to your cell phone via push notifications. This is super handy and a great way to be notified when things are lining up, when big market events are happening or big market moves.
Yeah. And another thing to note here is in the context of liquidity IQ, generally what just happened here is considered bullish for us, even though MA Rush is bearish. So what happened is we came down to this support, a lot of liquidity right here, a little bounce, price came down, more liquidity captures, and then finally a zone break. But then after we came down just, 10 points, quickly resumed or returned right back to the level. And on breaking back through the level, there was another liquidity capture. So a lot of buying or demand or selling, it's agnostic. It's just the sign of there being high trading volume. But basically the idea here is price is attempting to hold the level. And even after going below it, now when it blasts back through it, there's still a ton of trading volume. So in the context of the setup here, a long bounce, that's kind of a positive thing from a long bounce perspective. So I wouldn't be surprised if we range around this level for a while, but we will see. Even if we do come down and cross this alert level right here, I would think, I don't know, what do you think, Dan? I would think that's still I would still want price to return back to this zone after that and look a little weak in the zone, like right here, have trouble then short.
I definitely did not like this big up bar with no liquidity capture powering through that zone. So yeah, I'd like to see some weakness. This could just be a temporary retracement after having these 5-6 up bars in a row. Price taking a breather, and then the uptrend may continue. So let's see what happens. In fact, we do want to wait until the market opens anyways.
Definitely.
Yeah.
So on Dow Mini MYM, or I think this is Dow Micro, is that right? Yeah, Micro E-mini Dow. So on this one here, I think generally, MYM or YM follow what's happening on the other indexes. To an extent, there is quite a bit of a lack of correlation a lot of the time. We can see on NQ, momentum, it's about to go bearish, but it has not gone bearish. On MYM, it already has gone bearish. There's more of a swing down this morning. There's a liquidity capture off this support around 41,300. Now we're still bearish and we're in a magnet zone setup. So I think this would be a pretty fair candidate to short up here or at one of these resistances, 41,370 or 41,378, just by nature of the fact that we've had so many liquidity captures up around that area.
There's definitely something going on at these levels. Absolutely.
Yeah, and we have not visited this level down here, 41,300, many times. We can see that whenever price gets to this level, historically, it tends to just fall. Well, actually here it bounced, but a lot of the time price just falls right through it or runs right up through it. And there's a lot of whipsawing action. So I think there's a lot of volatility if we do come down to there. But yeah, this could be a good example of a magnet zone setup. It's bearish and we're here. Of course, we're going to wait for the open. But yeah, I think it's pretty likely we do visit that in the short term, 41,300. And just hopping over to the 30-minute, though, we got to keep in mind just how bullish this is. So let's take a look here. We're very short biased here this morning with a lot of these levels and setups, but most of these things are running pretty well to the upside for quite a long time. So it's, on MYM momentum on the 30-minute, and also, we're trying to make trades happen within the span of like an hour or something like this. So we're looking at smaller time frames, but MYM here does still have bullish momentum. Even on this time frame, though, there is a good short bounce opportunity. We recently had a very failed zone break attempt, but price has kind of been flagging up here, although very choppy. And on the 30-minute, this candle's looking pretty bearish so far. We'll see what happens at the open. Let's hop back to the 5 minutes and put this on the 15. So yeah, I really like MYM for a potential short. But we're gonna wait to the open to see if we do get a run up to like higher up here. And I think I had this actually on the chart time frame. And we'll see, we're not going to lose this level 41.38, 41.39, but we're just going to see more short-term levels as well that we can use to plan our trade. So I'm going to put an alert on this one. I think a good time to be watching is probably like 41.358. So I want to know that we're passing up there.
Yeah, I'm just going to address a quick question there from Christian. So, everything we do today is from a very short-term perspective, and seeing that you bring into say what Nvidia is going to come up tonight, the earnings report and stuff. This is something that, at least for this kind of trading we're going to do today, should not impact our decision making too much because we're going to be long gone when this is about to happen. Trying to, open and close trades within the session, or at least shortly after the session when it comes to closing them, should they be on a good run.
Yeah, exactly. So that's also why we're looking at such short time frames. So with Liquidity IQ on the 30-minute here on the 5, MA Rush did just finally go bearish on MNQ on the 5-minute, another potentially nice magnet zone trade. We're not going to be taking it because right now we're going into the open, but actually a pretty nice magnet zone trade, right? A short reward to risk of 1.8. That's pretty rare on a magnet zone setup. We can see the MA Rush just got invalidated on this candle until we see how it closes. Go ahead, Daniel.
And a quick note about those of you who don't know what we consider a magnet zone trade. It is when price is somewhat in the middle between support and resistance. You can see it there. It's a bit closer to the resistance side, but it's still in the middle. It's not like real close to any level. So if this happens, now we call this a magnet zone trade. And in these kind of setups, we're going to make a prediction as to which level price will visit next. Is it going to be the below support level or the above resistance level? And for the tiebreaker, because it could be any of these levels, we are using our MA Rush indicator, whatever the momentum reading is. Right now, you can see it just turned to bearish. You have this bear label on MA Rush. Maybe Nicholas, you can quickly highlight that label on the last bar, that one there. So often we just use this as our tiebreaker. And if this one says bearish, hey, then we're going to stay. We're going to make the prediction price will first visit the below support level. And our stop would be just above the resistance level, in this case at 9,725 or something like this.
Yep, exactly. And I'm going to push fix later today, just in case.
And Christian, lots of questions coming in. He's saying, does MA Rush repaint? Only until the bar is closed. So once the bar is closed, the label will stay there forever. But this holds true for any indicator because, as long as the bar is not fully established yet, signals may come and go. But once it's fully established, that signal will stay there.
Yes, and I'm going to push a fix for, I think, was a little bug in our TradingView Liquidity IQ here, where the table will override itself as the bars change. So I'll push a fix for that. I can see that happening right now. We'll get that out today. Okay, so on MNQ, let's keep watching. I like it for, I kind of like it for, I mean, we'll see what happens in however long we have, 30 seconds. But yeah, I'm not sure if it's such a good idea to be short biased on absolutely everything, but a lot of these setups do look like they're offering us a little bit more potential reward in the short term to the short side. On the 30-minute here, we do a bearish momentum on MNQ since we had that huge run to 20,000, whatever it was, 20,020. We just had a liquidity capture off this level. I think it's a decent short bounce or short magnet zone trade if we do come up to like 19,680 or something like this with a tight stop.
Yeah, and the market just opened. So let's see if there's anything exciting happening.
Gold really held through here off that level. MYM, and which is our trading tab? It is this one right here. So let me just give us an alert up at 19,680. Oops, price crossing 19,680. And of course, we got like the big psychological number of 19,700. So we probably want to see a test up to there before taking any entry. So MYM is flying up. Let's take a look right here. I think this is a good idea to take a short. Oh, so we missed the entry, unfortunately, but it came right to where we were looking to short and got a nice liquidity capture.
Oh boy.
We would place our stop probably 41,390 or 41,400, right, Daniel? That's a good psychological number.
Too bad we missed that
up.
one. That could have been a beautiful one. We have this liquidity capture event there. If price tested one more time, it would be yeah. Well, let's see what happens. Maybe maybe we can consider a short by limit order at this level.
Good idea.
Yeah. So maybe at 41365 or something. Yeah.
I want to wait until we get a little, improve our reward to risk. Yeah, exactly. Maybe 41379 or something, or 75. Let's see what happens.
And guys, you know what we're doing right now. It's the conundrum of trading. Either you can jump in right now, but then your price may not be as good, or you wait, but price may never go all the way up. I personally prefer what Nicholas is doing there. I'd rather miss out on a trade than being stuck in a bad trade. So let's go back to this one more time, Nicholas, to that what we just did there. So we did place our limit entry at 4.1. Was that
375? And what we should have probably done, and I wouldn't have placed it as low as here anyways, because I would have wanted it to come past this first resistance right here. But this is exactly what we were hypothesizing might happen, and we would have already taken our profits. So price came up to this zone. We were expecting it to test, and we were saying, look how many times it's had a liquidity capture. It's probably going to get one and be a good short opportunity. And clearly that's panning out decently in the past minute. Okay, so with MYM dropping, there's a good chance the rest of the indexes are also going to follow. They tend to follow each other in the short term quite quickly. So this one here is actually still a good magnet zone trade, but we want to see, it did have an attempt here to break these pivots. If we did take, and I want to be patient and wait, but if we did take a magnet zone trade here, I would place my stop probably right here at this area where there was a lot of price action. Let me just put on the crosshair.
A bit because above, if we went, perhaps,
yeah, if we went short prematurely like that, we wouldn't want to wait for it to come all the way back up here to hold our trade. So we'd probably be placing a stop at like 19,677, but that's also not ideal because once we pass the 70s or the 80s, there's a high likelihood we're going to test 700. That's where most traders' eyes are on. So wow, what a nice idea this was on MYM. So I'm going to cancel our limit order here because now the conditions for that are gone, basically.
And that's just good hygiene, in quotes, hygiene, trading hygiene, to make sure that all your pending orders, if no longer relevant, are deleted. You don't want to have an accidental fill there, then you not even be aware of it because you forget about these orders. So something that's important to always check.
Let me just put the Dow on this chart and over on this one. So that was a really nice, but you can just see how it's about identifying patterns, right? So MA Rush goes bearish and look at how many liquidity captures have happened here. And every single one was a good short trade opportunity within minutes. So that's why this, condition right here, another liquidity capture would have been a great short entry. So let's take a look at MNQ. I'm wondering, I don't want to force it too much. MA Rush going bearish, but I do like this for a magnet zone trade. Maybe we can even set a tight stop right at the top of this candle, but it's up to you.
Put a limit entry. Once again, I'd like markets, even though we're going to miss out on that trade, maybe put it to 19,640 as a limit entry and then with a tight stop.
Sure.
Yeah.
And we'll place our stop up at 19.6. Let's put, I don't want to be too tight, so maybe 19.670. And let's make sure that's all set up. And it is. And we'll see what happens. And of course here, like Daniel mentioned, we are potentially taking a non-ideal entry to an extent, but we're trying to capture some of a move within the time frame we have. So on gold, a lot of liquidity captures still happening. So I think there's been 3 liquidity captures just since we came back here. This is nice conditions for a long bounce. Of course, there's still pretty bearish momentum. I would not look
I would hold on with that.
buy.
That's not a clean setup. We had this nice zone break retrace, but didn't pan out. And now it was broken.
Both setups are iffy.
Yeah. Let's check on oil, see what's going on there.
Sure. And I just want to take one quick look what's happening here on MYM. So we actually just mentioned this before, right? We said that every time we come down to 41,300, there's a lot of choppy whipsawing action, and it doesn't tend to pivot there very often. Even though it did here and here, the previous opens, it certainly didn't. And so we might see some whipsawing up and down through 41,300. We've got our limit order here, and this is for a magnet zone trade with a pretty tight stop. If we do, and I'd actually probably place this stop even a little lower to be safe, because if we do come up and test that area, chances are we're going to go a little bit higher.
And guys, just to repeat, the rationale behind this trade here is because price is in between support and resistance. We just printed bearish momentum, and now our prediction is, hey, price will go towards the below support zone first before it goes up to resistance. And this is kind of what we mapped out here. The reason why we trying to enter by limit order is just to improve our reward to risk ratio, something that can make a huge difference in your trading. Just waiting for the market to come to you. For me personally, when I say, hey, I got the fill that I wanted, I didn't chase the trend, that makes me so much more confident in my trading. And hey, this is a good entry. I like it, kind of. This is exactly what we've done here. We didn't chase it, and we may miss out on it, of course, but that's just the name of the game. Sometimes.
Yeah, we're playing in a very risk averse way. So it's pretty likely, or it's certainly not out of the realm of possibility that this falls right to 19,550 or below within minutes, and we miss the trade. Anything's possible, obviously, but we don't want to be chasing it down here because we are near an area that tends to pivot, right? 19,600. That's a big round number in the market's mind, and we can see that when we hover our crosshair here, when price gets to that level, it tends to hang around it and then either reverse off of it to the upside or downside. We see a lot of pivots, except back here at one of the market opens, but generally a lot of pivots off of round numbers like that. So we don't really want to be chasing, because the immediate area it's going to bounce off of that to is probably 50 points away. So if we capture the trade late instead of limiting like this, it's not going to be good for us. Okay, so let's check on oil. So oil looks like it's trying to hold this bounce it's had since it lost this level. I still like this for.
I like it a lot too. If you can see, yeah, exactly. If you can see, did you put an alert there, Nicholas?
There's one right here, yeah, up here.
Okay, yeah. Oh, you can see it there. Perfect. Yeah. Hopefully we're gonna get that retrace. That would be a nice opportunity for a short entry for oil with a tight stop loss.
Definitely. And on MYM.
And I'm just gonna keep an eye on some stocks while you look at
Sure, yeah, because a lot of these plays that we're seeing, like on gold, not much happening. On oil, well, oil looks like it's probably the most promising. We'll see what happens. But on MYM and MGC, the moves we were hypothesizing kind of already happened, and we're going to wait to see if we do get a limit order fill. And at this point, actually, we'll see what happens. But once we get past a certain point, we're going to cancel our limit order and reevaluate.
Yeah, that's just sometimes the way it is. Let me guys quickly share with you, and this is just to, while we're waiting for something to happen, share a stock chart chart with you. So Niklas, I'm going to take back the screen
Sure.
for a second. And of course, if I can find my Zoom.
We got another zone break signal on gold, and we're just about to hit our alert.
Oh, nice.
I still don't like the idea of shorting gold in
Oh, you
the
never
short
know.
term. It's so bullish.
Guys, oh, all right, we're going to look at gold in a second again. Something I like to do at times is I like to combine our dashboard liquidity view to find some setups, which, of course, this dashboard is end of day, but for setups which might be of interest for the next day. And what I've done here is I found trades which are currently at a support level, and we may see a bounce to the upside. So price went down to a support level. You can see this one here, Elf Beauty. And I like this one because this, first of all, there was a huge gap or a couple of gaps in the last couple of days. And, gaps tend to get filled over time. And this stock has been so bullish for like years and years and years. And, I was wondering, hey, maybe you're going to see a bounce off this level today, perhaps some day trading opportunities there. So if I go to ELF, we can actually see that price did, this is the daily chart. So if I go to the 5-minute, I'm going to hide liquidity IQ just for a second here to make it a little less cluttered. We can see that we did have, we gapped open a little bit, not a huge gap, a bit of a gap open. And, I'm always, if I see this kind of stuff, I'm tempted to take a small scalp here to the upside because I think, hey, this stock is ripe for a bounce to the upside. And if you play your cards right with a tight stop loss, in this case, just below potentially this gap open, this could be something interesting to do as well. So let's keep an eye on this. But this is something when it comes to stock, which I like to do, finding my, setups that looked interesting. Look, we just in the support zone. And this stock, can't see it a bit hard, but this stock has been bullish forever. So I would not be surprised to see a nice bounce off this level in an attempt to fill these gaps that we had in the last couple of days. Anyways, back to gold, Niklas. Where are we there?
Sure. So let me share my screen.
Yeah.
Share. And this should be the right window. Share. Can you see my MGC chart?
Oh my goodness.
So yeah, I mean, look, this isn't a clean zone break retrace at this point now. It's another zone break. But this is just volatility at the open. But again, gold is so bullish, and so far we're in a scenario with a higher low at this point in time. So let's keep an eye on it. But I don't know. What are you thinking, Daniel? I think it's pretty risky to be shorting here. Look at how fast we came up and retested these levels again. I wouldn't be surprised if there's a lot of bullish momentum still. On M and Q, we're still hovering here. We have not visited this zone, but price is trying to bounce. We've still got our limit order in place. What do you think? I think it's still a valid idea for a magnet zone.
Yeah, but
it's right in the middle. Yeah.
But you know what? Should price go down to this support level around 19,560? I mean, I do see a bit of a range bound day today. I would not be hesitant to potentially even play a long trade here, seeing that price might bounce off this level to the upside. It looks very rangy. Price has been ranging for days now after these huge moves. Last week, that's consolidating, but also these areas, these levels of consolidations, there are some opportunities there for sure.
Definitely, and if we do come down to this zone,
maybe put another alert there.
Liquidity capture. Yeah, I'm going to cancel our short idea. I'm kind of hesitant to. We'll go long. If we get that liquidity capture, if you'd like to, but I'm kind of hesitant about it because the bullish momentum on here on the 15-minute, let's say, even on the 15-minute with liquidity IQ on the chart, look how far support is down here.
Yeah.
And on the 5-minute, we did just shift to bearish momentum. So I'd kind of want to see what happens here before we.
Liquidity IQ picks up these levels from the 15-minute time frame.
Right now, it's picking them up from the chart. So this is 5 minute
from the
stuff.
chart time
on the 15-minute. Look how far support is. It's all the way down here. So I would kind of be, and we're clearly going to be testing this pivot back here, probably this zone. So I wouldn't be surprised we come all the way down to like 19,540 or lower real quick.
Yep.
But hey, we're being safe here. We don't want to be chasing any trends. In the short term,
Oh boy, would have been a nice trade. But you can't think like this
no, because
as
then
a
you'll chase.
trader.
You'll
Yeah.
enter short now, and hey, entering short now,
No.
yeah, great idea. We might come down to here, but look, we're just pay attention to old pivots. Like this could end up being,
That's
if we
right.
chase short now, this could just bounce right off here and be a higher low, and then we're stuck in the absolute wrong direction.
No regrets. Yeah, but I guess we can cancel that limit order for
Yes,
now.
definitely. Because if we do bounce all the way back up to there, you got to think in relative terms too. Like if we do bounce all the way back up to where we had our limit order, well, now it's not the same scenario anymore. Now we have set a higher low or almost based on this one. And that's kind of like bullish confirmation on the 15-minute. We are still bullish on MA Rush. And like you said, we're really range bound. So we'll see what happens. But we'll keep our eye here. Look at that. Wow. Well, that's because it's based on the past high volume pivot there, but almost to the tick. Geez, we should have taken that long bounce, Daniel. But no, it's it's not perfectly set up. So yeah, we'll watch this. And wow, look at the bounce back up on MYM. So this is not really bearish stuff going on right here. Let's put this to the 15-minute and let's see if we can see all those liquidity captures we saw before. Actually, I think we had it on the 5-minute. The reason why I don't see that is because we were watching it on this chart. So quite a bit of inverse correlation happening between the Dow and like NQ today, right? When the Dow is going up, NQ is going down, and when NQ is going down, the Dow is going up.
Yep.
So I still like this one for a potential short, but I
If
want to see it
price
come up
comes
into
up,
here.
yes, exactly.
Yeah, like I
So
want to
maybe
see.
put another alert. Yeah.
Sure, yeah. Let's put, whoops. Let's put an alert 41,362.
And you guys may think, hey, why don't we just put a limit order there? Because that basically would be the same thing. And yes, this could be one way to do it, but it's always, good to double check. If you're in front of the charts anyways, I guess you could react
Yeah,
fairly
because you
quickly.
might set a limit, but just the way things look at that moment in time might look way more bullish than you would like to be shorting against, right? So
Yeah.
a lot of, yeah, that's a good point. So we'll watch it here. It looks like we might hopefully hit our alerts. We have had all these liquidity captures off the 41,370 level. So even
Yeah.
though it's technically bullish, if we break past this other morning high, I think it's a pretty safe short area up in this zone.
Yeah, up in this zone, not when the alert, but the alert level is you want
No.
price to come up
Yeah.
even higher. And once again, this is for improving your reward to risk ratio. Because in the end, just like anything like poker or whatever, you want to take trades where your reward is high and your risk is relatively low. And if you keep doing this up, and I believe this can make a big difference. Definitely, it's the opposite of chasing something. Because typically, when you chase, you enter way too late and you have low reward and relatively high risk. So
Exactly. So here it looks like hopefully we'll come up into this zone. And again, we're basing it on a pattern we're seeing, just straight up with our eyes on this chart, right? Which is we've always had liquidity captures every time we came up to this level, even back here at this level around 41,360, but we're going to try and improve reward to risk by entering short in the 70s. And we'll see if price in a split, in the snap of a finger, powers right through 41,370s up to here, like the 80s, well, that's not so bearish anymore. So that's why we want to sit here and watch it for our entry. And I'll place a limit order just so we don't get a really bad
yeah,
market fill. I'm not going to place it right now, but I'll have it ready to place. So
yeah,
we'll keep our eyes open here.
with a tight stop. Yeah.
And of course,
Just
there's a lot of traders shorting right now. And if we do pass through 70, there's a good chance it's going to blast real quick. So
okay.
we're going to sit and watch. Okay, okay, okay. I think we should take it off
Yeah,
here.
let's do it. Ah, what?
Oh, no. Well, good thing we didn't send the order. This is what we were talking about. So right up here where we have all these liquidity captures, we've kind of now blast through all those past levels. We can see this zone getting bigger. That's where we would have set our stop up at 41,400. So it's a good thing we did not set an alert, a limit order ahead of time. And, we did what we were saying we were going to do, although we were just about to enter. I'm not in love with what's happening right here for a short entry.
And look how big
Let's see what
these
happens.
zones around these resistance levels are. They're so huge because they're these humongous candles. And guys, if you didn't know this, these zones, they grow and shrink with markets volatility. That's why they're so huge right now.
So the nearest resistance right now is pretty much being tested, which is 41,390. And like we were saying with this one's bull flagging on the longer term, which means like we had a huge bull run and now it's been consolidating up near all-time highs. The nearest real high is probably like 41,408, and we're already through that. So, and right now, look, we had a liquidity capture. When you get a liquidity capture to short, a nice thing to see, and this is what we were just saying, this is we want to watch to see what happens once it tests the 30 or 70 range, because it could just blast through, right? Because a lot of people are shorting, a lot of people are expecting to set their short stop loss right in this range, and all these people are now covering their contracts, or a lot of traders are buying the breakout. It's running up real hard. This is definitely not a liquidity capture short bounce set up any longer. One thing when you're looking for short liquidity captures is you want to have what we call a big upper wick. So you want price to wick into the range, which is what happened on that opening candle, which means price tries to set a high in the range and it quickly gets sold off for a short bounce. You can see here, this one has a big upper wick. That was a really nice short entry opportunity. This one right here, big upper wick. There's at least a quick downturn here, big upper wick. This is the opposite of a big upper wick. It has a huge, the start of the candle is in the volatility zone here, and the open of the candle, and it just blasted through with a big bullish candle. So we would want to see now a bearish candle happening here, but I really don't like this for a short today, right now, even though it might very well drop down. I think we saw the market telling us something here. Once we came down here, people took that opportunity to buy the pullback. But of course, like someone wrote a comment before, I don't know if it's manipulation is the right word, but it could just be range bound all day, but definitely that setup's invalidated for now. So gold, this is what we thought would happen. It's still ranging. Oil is still our best deal for the buck going on here.
Yeah, it was near that nice broken support, so much now acts as resistance. I'm just hoping we're not late to the party, because we got this pullback. It was near, it was not perfect into the zone, but the pullback was there, something that we see a lot after a zone break. And but let's see. Sometimes
price,
trading is also about being patient.
Yeah, and MA rush here, like even though we're bearish, MA rush is just a reading of multi-time frame like momentum. And right now, we did pull back above all the MA rush lines, and now they're kind of acting as a little support net here. We can see when that happens, price tends to range for quite a while historically, or in general on any chart, really. So back here, same thing. Look, nice bearish move. Once it starts to fiddle around with those lines again, it's a sign momentum's changing. So we'll see what happens, but that's why we've got our alert up here. I don't want to be chasing it down here. We can really quickly. Plus, we got a big number here for traders, 75. If it breaks that, it's probably going to go higher. So we want to wait and be patient.
Yeah, and Ken's pointing out that oil is having a medium relevant event, the crude oil inventory at 10:30. And Ken, we looked at that at the beginning of today's session, what's coming up. Nicholas, real quick, just for the fun of it, and I know we said in the beginning, let's not look at too many symbols, but let's check out real quick copper HG.
Sure.
Yeah, HG1. There we go. This is micro, just the regular, I guess. Yeah.
This is an extremely expensive contract, by the way. Copper
Yeah.
futures like this, I think every cent it moves, it's like a $25 or $50.
But look at this. It's I was thinking definitely have bearish momentum. We had the nice zone break, but it's a similar scenario to what we see in oil, where we may see another retracement back to the broken support zone and an opportunity potentially to go short should price go up a little bit further into the zone. Kind of a similar scenario.
I
Scenario
like
as to
this one
what we
more
saw.
than oil actually, because on oil we didn't even get a zone break. We actually had a lot of captures. Then we kind of just had a straight fly down to here and then a bounce. But on copper, we already had a bit of a retrace. It broke, and then it messed around with this level for a little bit before finally losing it. With this nice like bearish candle right here. And right now, technically, if we were to chase this short trade, there's a lot of nice places to place a stop loss, which would probably be right around here, right? This pivot coincides with this pivot, which I wouldn't be surprised coincide with some historical level.
You put an alert there too. I know it's in fact something we can do if markets remain to be slow today or not getting into fills that we want. We can have a quick look at how we can figure out how expensive a trade would be. Actually, one really easy way would be, Nicholas, is if you can just put a limit order in there and put a stop loss at a certain level, because Trading View and most other platforms will do it well. Will do also.
And
Will show you how much you can potentially lose or win if your
sure, and
stop is
I
hit.
want to trade the
Or
micro contract, right, Daniel, on copper, because the other one I'm pretty sure
yeah,
is an extremely expensive contract, and it could move a lot really quickly. But how much why does this copper contract look so different
it's
than
because it's very illiquid. The micros
does it
and the
have? Is it?
candles.
It still is at the same prices, right? So where do we have
It's
4176?
a very similar setup. Yeah.
Okay, it's the same levels. It's just extremely illiquid. So you'd like to place a limit order, right?
Just to see, I just want to show how you can estimate how much you were to risk, because TradingView will tell you. So if you put the limit order at, yeah, exactly at this
Yeah. So if
level,
we
it will
wanted to
tell you
risk
it's at
75,
it's $75. If you What's your stop loss? Maybe put it a bit higher above that level, 419.30 or something. Yeah, $90.
yeah, it's very illiquid. And by the way, if you didn't know, if anybody didn't know this, I'm stop losses. With most brokers, at least by default, they trigger based on the bid and ask, not the current price. So if you have a super illiquid symbol like this, you might go short right now, set your stop loss all the way up here at 4.20, and then you get stopped out immediately, and price hasn't even gone to 4.20. And you get stopped out because the ask price on the bid and ask went to 4.20, and that's what triggered your stop. So on super illiquid symbols, you're also going to
Yeah.
want to account for that and set wider
And
stops.
and Dean said that MHE the contract will expire today. We didn't check this, and I guess maybe if this contract was rolled over already, we would see it more liquid. Yeah.
Oh, that's a great point.
Maybe go to MHE and let's look at the next month contract if we can find it
Can we
here.
do that?
Yeah,
So
probably.
would that be two?
I
Or here, September is going to expire.
It's probably
So
these. Yeah, try the September one just for the fun of it. I
this is
guess
the
that might.
expiring one, I
It's the
think.
same. Yeah, maybe October would be the
Yeah,
better one. Let's
that
have
would
a
make
look.
sense. And
So
okay, well, we're gonna have to wait.
yeah. All right. Anyways, yeah, just
Let's check
some
silver.
another interesting setup to look at.
And look, they're all looking the same, all of these metals for now. They did have a big run recently, but again, silver is so bullish short term. Right now, this is on the 30-minute. Let's put it on to the chart time frame and see what we see. Probably the same setup as copper and oil. Wouldn't surprise me. Yeah, and on silver here, it is it's already quite sold off. We did just bounce off of a previous pivot range, which, coincides with this level, which is like the 2920s. And we were actually saying this in the lunch and learn yesterday. I wouldn't like to be touching shorting silver, especially so short term like this, just because it's on such a bullish tear, at least in the past 2 weeks. And yeah, generally bullish in general on silver. I think that's we're a little late to the party on shorting silver right now for this time frame.
Yeah, I'm just checking some of the other symbols that we have. Because we do want to take some trades, so we may come into this scenario where we actually will force a trade today, just
Yeah, we don't want to.
Not to disappoint.
Exactly.
But yeah, as you can see, sometimes things are not lining up perfectly, or we missed a couple of opportunities because we didn't see it. And this is just one more thing, because of course here we're doing a lot of talking and we're not as focused on finding these symbols to make this more educational. But of course, if you trade, it's always important to be focused on and don't have too many distractions, so don't miss out on something of interest.
MYM still might present a nice short opportunity today. We could very quickly come right back up to here, so we're not going to take it right now, but I want to see what happens if this ends up being a failed zone break. We actually didn't even have a zone break signal, even on the 5-minute. But we'll see what happens if there's a certain amount of liquidity captures or things look a little weak. But for now, it's still trying to break out. I think if there's anything to force a trade on, I would probably vouch for oil.
Yeah, maybe by what we could do here with oil, put a limit order, perhaps at 74.80, around that level, and put
Yeah,
the stop loss just above that pivot that we saw previously at 75, a bit higher, maybe 75.20 or so.
sure. So limit order, okay. Unit 1, 75.20.
Make it maybe 2 contracts.
Yeah,
just
sure.
So we have a bit of fun too.
And yeah, I think that's decent.
Yeah,
And we'll
let's
see
see if
what
we get it.
happens. I'd probably try to scale one, then scale the other, but we might not have time for that, right? So let's go for it.
We can still scale a bit more. This is still this is just in Canadian dollars, so this is maybe 75 US. Even
Monopoly
with
money.
that, it would. Yeah, it's definitely something that we would be comfortable with. And of course, you always need to be within your risk tolerance. But I believe, especially if you have a high reward to risk setup, this could be of a decent amount of risk to take with a nice
Definitely.
reward.
And what are some other symbols we can check out here, Daniel? Do we have any nice stocks we can find?
Yeah, I looked at ELF. It's not panning out the way I thought. If you go back to ELF, maybe we may actually see a gap fill now. But I didn't, of course. Let me just maybe quickly opening it up here. If we can find it. Well, it's still hovering. I mean, it just came down a bit. It didn't fill. Yeah. You know what?
On ELF, let me open it up here on this chart. You're not sharing your screen.
I mean, it looks really messy on the 5-minute, but on the daily, we have this very clearly defined bounce of that level. If it will happen today, the bounce, that's a different story. But we are at a major support level when it comes to the daily chart.
Mm-hmm.
Yeah.
And I'm looking here. I want to see, are there any long break retrace opportunities? And of course, on stocks, I don't think we're going to be opening a stock trade if we're looking to close it out or have it open within 25 minutes. But what we could also check out, I want to see what is very volatile. And to do that, actually going to use, and which screen can you see right now? You can see my chart. Okay.
Yeah.
Excuse me. So I'm just going to quickly, I just want to see what are the biggest movers today on stocks out of curiosity. And hopefully we get this fill real quick on NQ. And you can see there's a lot of trading action happening here. We kind of got like our own little, well, we do have our own little mini magnet zone set up here between this new support, and this is just off the 5-minute chart time frame. But just based on that, it is still a valid setup. And I just want to see what's showing on oil on the 30-minute. Probably a short zone break off one of these levels. But let's just take a look. Okay, yeah, there was this level back here around 75.40, which would be the patient thing to wait for, but on this time frame, we're not waiting for that. Price bounced off the 74, these old levels. And yeah, all right, I think it's a valid trade to force, if anything. So where did I have that screener? Right over here. And I think we can just come in here and whoops, open up our screener we showed yesterday, actionable movers. And let's see what is moving the most today. The index NQ, at least. Just take a look. So our oil trade got filled over here. So we're short now. We got our stop up there. Of course, like we said, the patient thing would have been to wait for a retrace, but we will see. So NQ coming down. So tech is having a little bit of a down day so far. And what is moving a lot today? Let's take a look here. And take a look. Do we recognize anything here? Bath and Body Works.
Oh, that's a trade we called out in our Lunch and Learns last week on Tuesday. What's it doing? Can we have a quick look?
Short or long?
We did long, but
uh-oh. No, let's take a look to see what's up.
what?
Bath and
It
Body
was in a
Works.
nice
Oh, it's
boy.
earnings today. That's why.
Earnings.
That's okay. Not a terrible reaction to earnings just yet.
And we may see the gap fill there. Actually, this could be an interesting one. This one on the daily time frame has been in a magnet zone. I believe with good reward to risk. Let me see
Well, we still got bullish momentum. That's nice. That's nice. If price bounces up short term, we're not going to get a bearish MA rush set up. On the daily time frame, we probably saw closer to a liquidity capture because the volatility boxes will be larger. Let me take a look here.
Yeah, but this one is still, I mean, today was earnings. So, yeah.
Yeah, we'll see what happens. And I think the stop on that one was this the one where the stop was down at 29.20 or was it lower?
I would need to refresh my mind, but I think we're not stopped out. So this is still
No,
a
definitely
good
not
one.
stopped out. But
yeah.
Yeah.
So we'll see what happens there. Maybe I should have checked on the earnings.
Very well, like there's always going to be earnings at some point in time, especially when we're trying to swing trade. But look at how many levels have acted as support here. So it's a very range bound symbol for the past. What is this?
Yeah, the idea was
wow, since 2022.
Yep.
Okay, so we'll see what happens. And look what happened the last time there was a bearish MA rush. It immediately reversed. So maybe we'll see that happen.
Yeah.
All right, so on our oil, okay, we got our fill. That was nice that we got to wait to get our fill instead of chasing it too much. We'll see what happens there. If we were to plan a target on this, I'd probably want to be setting a target like here.
Just above that level, yeah.
Yeah,
or maybe even the
this
one before if you want to be conservative, yeah.
Yeah, like 74.40 or something like this. So I don't think you can set OCO targets after the trade is opened.
It's too late now, yeah.
We would wait, yeah.
You would have to place a separate take profit order, but of course that would not be an OCO order with that stop loss. So then you'd have to, once filled, you have to manually go in and I believe get rid of the stop, but maybe not because we are in position.
Because exactly. Because if the position closes, I'm pretty sure this will close. But if the stop gets hit, then our limits will still be open. Yeah. Our targets would still be open, I think. So I would like to place a target on this one. Well, where's our risk? Our risk is about 40 cents away. Let's try to keep it at least over 1 to 1. I think this other level is probably pretty safe, 74.38. And of course, we're just being conservative here. Let's place this 74.38, a limit by order. That is correct. And leave that as it is. Let's check out some of these other symbols. So NQ, look, it's bouncing off of these old pivot ranges back here. And what was this level based on this big bar that got bought up hugely? Was 19.540s. So we're seeing a little bit of demand coming in there. On this time frame, at least on the 5 with liquidity on the 15, Yeah, we kind of bounced off here, but there still is this area, the focus down here in the middle 400s. Oil, silver. I wonder what's happening to gold. I bet it bounced. Let's see what happened. Did it bounce? Let's hop over to the 5 minute. Yeah, so we were talking about this for a long bounce. Well, for initially for a short break retrace, but we were saying if you were looking to do a long bounce, what happened this morning was a very good sign for that, because price broke down through the level. Or I'm using the 5 minute time frame here. That's why there's so many levels. Maybe let me put this on the 15 minute. Okay, so once we had that, sorry, go ahead.
Yeah. So I'm just answering some questions. Sorry for that. Maybe finish your thought first.
Sure. So when we have this zone break here, when you have a retrace, it's never a good sign that there's like 6 giant green candles leading up powerfully up to the level, and then the last one just blasts through it. That's not a nice look for a short break retrace. Instead, what we would have wanted if we wanted to take a short break retrace trade is on this candle right here. If this candle perhaps was red, it has a nice upper wick at least. It's kind of like a doji candle. But if we saw the liquidity capture on this bar, that would have been a better sign for a short point of view, because it would have shown that once we tried to test the level, there's a bunch of selling. That's what that would have meant. Instead, we blasted through the level, and on this bar, there was a liquidity capture where price blew through it, which is telling us there's probably a lot of buying volume at the level, which is nice from a long bounce perspective, which is currently the liquidity IQ setup.
Yeah, a couple of comments here for our oil trade, and Christian, thanks for pointing this out. There is an economic event coming up in about 20 minutes, so we probably want to at least protect what we have by then. So have a bit of time. Well, let's see what happens. So for overall, we were, pretty much right with the overall trade direction. Of course, this is still very minor.
That would definitely explain the ranging we've seen since the open. I guess like indecision leading up to an event, right? People are just waiting on either side of the fence to decide where to hop over to. But
so we're gonna wait a bit. But for sure, Christian, we're gonna close this one out.
I think to be safe, sorry, just to put the target above this past pivot right here.
Because we may see a bounce,
Yeah, exactly, if we're going to be range bound.
And Christian also wanted to know, how long is this live trading session going to be today? It's always about 90 minutes in total. So that means you're probably gonna, finish off at 10:30, around 10:30. Yeah, markets are quiet. Sometimes the last couple of times, we had like 4 or 5 trades that really lined up nicely. Today, not much happening. We missed on that nice that we hit the target.
No, I closed it out manually because I realized we are hitting 74.5, and price, if it's ranging, tends to bounce off of round numbers. So I didn't want to wait for us to hit 74.44, when 74.5 statistically is probably a more likely bounce point.
Yeah.
And look, we can see we just touched 74.5, which I think was our fill, or 74.51. But we're just being safe here. Of course, we don't know what's happening at this event. Thanks for even pointing it out. I think we'd forgotten it was there. That's why it's important to have stop losses in place. But it can easily, crack through 74.5, but we're not experts on the fundamentals of oil production. So let's take our profit while we have it if an event's coming up.
That's right. So David also pointed out markets are quiet. Yeah, in the shadow of the upcoming NVIDIA earnings tonight, and also AMC.
Oh, true. Right. That's probably a big factor on NVIDIA at least. And let me see here on NQ. So a lot of the calculations in Liquidity IQ are based on, or not a lot of them, but the volatility boxes around levels take into account multi-time frame ATR. So the ATR from different higher time frames, and then uses it to determine the size of the zones around levels. So once Liquidity IQ calculates here, I'm talking about these boxes. But one thing, and in case you guys don't know, I think most people do know, is, average true range is a sign, and this is on a 14 period. Let me put that to a 1 day. ATR is a sign basically of how really volatile or large the candles are relative, to historical action. And somebody said, I forget exactly who it was just pointing out that, yeah, markets are slow today. And of course, we're just at the open, but we can see how small the ATR is so far. I think that's obvious. Just looking at the candle, it's pretty range bound. But yeah, we're definitely not having a lot of action this morning just yet. And what's happening on Dow? Dow as well. I mean, look how much of a breakout opportunity this looks like. I guess, yeah, everything's quiet and ranging. What we tend to see at these moments when things are like indecisive, especially up here, is there's going to be like things are coiling up big time on a lot of these indexes. We're so close to all-time highs. Let me get rid of this. That price just comes to the liquidity levels and then toys around with them for a while. And this is on the daily. Let me bring this down until finally like a decision is made and price explodes to the upside or downside through them. That's why it's so important to be aware of where they are on YM right now. That level is 41,400. That's the line in the sand. And if it holds 41,400, well, where do we think it's going? Obviously, to the previous all-time high. I think that's not the all-time high, excuse me. One of the all-time highs, the second all-time high or third. And that's around 41,600 would be the next point of focus if this holds. So oil, yeah, we would have hit our target, but it's not safe for us to hold into that event. There's a high likelihood it's going to come down to here up to here. Yeah, exactly. Okay, let's take a look at YM. So YM, I think this one is probably the most interesting of the indexes in terms of not having to chase. And a nice move down on oil. So that was definitely a good hypothesis, but it's way too unsafe for us to hold into that 10:30 moment. Exactly. So on NQ still kind of, this we had at least, we perhaps should have set our limit orders a little bit in advance, but we saw on YM on micro Dow why that isn't always the best idea to set limit orders way too far in advance, especially near the open, because when things happen, the candles tend to move so quick that you might just get filled and stopped out in a second. So it's better to just like watch it and get a feel for it some of the time. But our ideas at least for those short bounces and the short magnet zone on MNQ, YM, and MCL at least worked out well in theory and in MCL in reality. Okay, so let's take a look at.
I'm just browsing through a couple of symbols myself to see if you see anything of interest.
Questions. Yeah. We just had a confirmed divergence in ES. Are you not looking at divergence at all this morning? Well, we haven't used divergence cloud. Well, we don't tend to necessarily look for divergence on using any other indicators, but let me just take a look. And it depends on which time frame are you mentioning, Stefan?
Yeah, and I already answered to Christian or Stefan that we're trying to keep it simple on these live trading sessions. If we overwhelm with too many indicators at once, it might be I guess more confusing. But certainly we will cover these other indicators, divergence cloud, 1 to 3 strike, our power bundle indicators in our Tuesday sessions more frequently.
Yeah. And I just like to take a look right now. I just want to see if it has a very nice win rate on the Trading View divergence cloud, which is always, again, we get a lot of questions. Which time frame should I use the indicator on, or which symbol should I use it on? On time frame. I think I heard you said that. There's no hard and fast rule. The rule is to look at the statistics. So I guess that is the hard and fast rule. I accidentally put that in the center. I'll move it in a second. Oops, it's number 7. And put that to the middle right, I think it is. So pretty good, 70% about on the short side, and a nice short signal back there. and we're already losing the conditions for the bearish divergence, at least from the indicator's point of view. That's why we took a partial exit here and the clouds stopped from divergence cloud. So again, just kind of range bound stuff happening for the moment, at least on the 5-minute. But look, a lot of nice bearish stuff happening here. So a bearish signal, MA rush is bearish. We had a very clean bounce, short bounce off of this level. I would probably, we did have, it is kind of having some higher lows here, but I think it'd be a pretty cool short trade opportunity if we did come back to like this zone right here, to short with our stop, based somewhere around 5650. So,
Yeah, and guys, for those of you who don't know this indicator right now, maybe Nicholas just show it without all the other ones so
sure.
we can keep a nice view. This is called our divergence cloud indicator. It shows you areas of bullish and bearish divergence. These are these shades around the candles, like these greenish and these reddish shades. But in addition to this, it will also give you entry signals. So these bigger triangles on it, like this one, that the red one there that Nicholas was just highlighting to the downside, and the greener ones, these are entries or entry suggestions, and the smaller ones, these are suggested exits. So this is a very concrete indicator. And the real cool thing about this indicator is that it will auto-optimize. So it will tell you or figure out which settings should you use for this particular symbol and time frame. So here it's the MES on the 5-minute, and the indicator is telling you, hey, use setting number 7. You can see that they optimize setting number 7 in that box on the right-hand side. Yeah, the indicator will tell you this. Then you can just go in and set the setting, and it's optimized, dialed in for this particular market.
One thing, Daniel, just for any users of the Power Bundle indicators, just want to remind people that you might have seen me do this. Now, by default, the indicator has auto look back on. Yes. And when I select this, you can see now the optimized settings are actually number 6. And the reason for that is auto look back automatically determines a pretty reasonable amount of data to look back over historically to find good settings. We can see it actually improved the short win rate. However, we can tell that these win rates and the optimization that happened to find these best settings were based on data only going back to July 29th. So just under a month ago. Whereas if I turn off auto look back to no, it's going to look back all the way to this date if that's available, which on the 5-minute chart, it isn't. I think on our plan, we have 20,000 bars of data available. So now the optimization, even though it says the start, maybe we should update that, see if we can take the date from the first available bar instead. But it's looking back now over every bar it can find as far back as possible, until it hits 2020, December 31st. So that's just explaining that. So a lot of the time I'll turn auto look back off because I want to see what works over the longest period of time possible. Another thing with divergence cloud and these indicators is look at this signal right here, this short signal, which then immediately look how far price, well, not that far, but on ES, pretty far, 30 points against the signal before technically using the entries and exits of the indicator. It finally triggers an entry in the opposite direction with this long that then exits out here. With this indicator, unlike Volatility Crusher, the other one, it doesn't have a built-in stop loss. It's taking dynamic, what it thinks are good points to probably be exiting your trade and scaling out. So whenever you trade with Divergence Cloud or 1, 2, 3 strike, just keep in mind that you should be setting actual stop losses based on reasonable stuff like pivots. Let me just turn this off. Pivots. So on that short trade back there, like this one, there's not many nice pivots around here. Maybe the pivot would actually be on the candle of the bar to set a stop loss. If price comes back up over here, exit the short trade, which would protect you.
And of course, you can
against
always
that.
combine it, Sergeant Trap, nicely with Liquidity IQ. So if you look at the levels of Liquidity IQ
Yeah,
and
do that.
Divergence Cloud, maybe we can just quickly do this. If this would have helped us, maybe not so much in this case. How do you configure Liquidity IQ?
I have it on the 30. Let me put it onto the 15. But in this case, on that short, I think we would still take it thinking it's a good magnet zone trade. It just shows the importance of having a stop loss.
Yeah.
On that one. And like another good example of that, let me find a good one, is, yeah, looking for signals that make sense. So here's an example where Liquidity IQ made sense with Divergence Cloud, where we would take a short like this, look for the nearest pivot, which is probably around here, set it as a stop. And once price comes down to a level, we're seeing a bunch of liquidity captures. Both Divergence Cloud scales out, and it would probably be a good time to be scaling out on Liquidity IQ from Liquidity IQ. And with this short signal right here, probably want to ignore that one because we just had that same, look at this, that's the same pattern we spoke about on gold, where this is good for a long bounce. Price really powers off of a support level and there's a liquidity capture. There's a lot of demand and buying volume. I would be ignoring this Divergence Cloud short signal because the chart just doesn't agree with it, or the levels that Divergence Cloud doesn't know about from Liquidity IQ. And another thing is these short and long partial exits. So like on oil, we scaled in with only 2 contracts, right? So if we're only trading with 2 contracts at a time, we want to tell Divergence Cloud to also run your optimization based on, thinking that you're scaling in with 2 contracts and scaling out with 2 contracts. And that'll change what the optimized settings are. And we can see here 69%, 69% on the 5-minute here for oil. So that's pretty good in both directions. That's a very nice short signal right here. And look, another important point about pivot stops. You take this long, set a stop loss if you're trying to trade just the signals off Divergence Cloud, because you'd be waiting till all the way over here to go short, to reverse your position. So maybe set a stop on this pivot or this pivot over here. One last thing, I don't want to harp on this one too much, but we're getting near the end to take a new trade, is you can also tell the indicator to only optimize or only think about trading in one direction. So here it gets about 70% in both directions, but it's forcing itself to do well in both directions, which is limiting the amount of things it can test. So if I say, hey, I only want it to be good at taking shorts, I can click short only, and it tells us, I mean, look, we just got 85% short efficiency just off that, and that's not even the best. If we select auto 10, which are the optimized settings, 70, oh, it's because it's going off long and short. I think this is something I need to fix. Well, let's put it back on to number 9, and I'll mark that down. So we're going to get a couple nice little updates you'll get on your trading view today. I'll fix that, and also the table printing from Liquidity IQ. But here, yeah, 8.5 out of 10 short trades that this thing signals since July 29th are hitting their targets or scaling out profitably. So here's an example. This one is an example of a loss that we would have been stopped out on, and so on and so forth.
Cool.
Okay, I want to take a look.
Great. I want to look at oil to see what is happening at this news event.
Sure, yeah, let's wait through that.
And look at all these beautiful profits we could have collected by now.
Don't torture yourself. Yeah.
I'm kidding. No, this is all good. And for sure, we want to be out of this trade by now, because going into a news event is completely unpredictable. And in fact, if you're a prop trader, I think news trading is not allowed by most prop trading firms. Is that correct, Nicholas?
Yeah, Apex, I think, has a pretty lenient one about that, which is like they don't want you entering into a position that's large and then exiting out of it like right around a news event within minutes. The Trading Pit and other firms are similar. Like the Trading Pit does not allow you to enter. Well, they do. All these trading firms kind of allow you to do them. But, if you make some massive windfall profit off of this obvious kind of gambling, like you clearly knew the event was about to happen and were playing the chance of a huge whipsaw, they can, if they want to, in the fine print, invalidate those trades from your potential profits. So if this is a perfect example right now, I think on the Trading Pit, I think it's a little more lenient on Apex. You're not allowed to enter into a position and exit it within 2 minutes of an event. So if we entered into a huge trade for 50 contracts right now at 1028, and then we exit it right at 1030 in 10 seconds when price flies in a direction, they're going to invalidate that and potentially disqualify your prop account, because they know what you're doing. Like you're basically trying to gamble off of what is technically not your capital in theory to make a huge profit. And then they have to pay you out on that.
Yeah. And guys, just also keep in mind, we're like seconds away. This is not a major event even. This is don't expect too much fireworks.
Yeah. Like I'm always amazed at how fast things move right when an event starts, because I mean, has the data been digitally released and it's being incorporated into algorithms, or is somebody speaking? Even when someone's speaking, price goes crazy right when the event is scheduled, not when anything has even been said.
Yeah.
So it's
And this is a minor
interesting.
event. As you can see, not much is going on. But yeah.
Was a nice
Guys,
follow through, but not worth it. Not worth the risk.
yeah. Okay. So Stefan, for you or Christian, we're gonna cover a volatility crusher, the other indicator, in our power bundle on Tuesday. I'm gonna keep it simple today. And yeah, guys, if you have any other questions, I'm gonna look through some stuff here. I think we covered most of the questions. You can always reach out to me, of course, or reach out to us through our homepage, tradingindicators.com. In the top right corner, there's a contact form. Put your question there, it goes straight to my inbox, and I'll make sure to get back to you as soon as I can. Sometimes it takes me a couple of hours, maybe even a day, because sometimes I get a lot of questions. But yeah, I'll make sure to get back to all of these. Yeah, very tame reaction of this news event, at least so far.
Yeah, I think the big line in the sand here is like 74 to 74.20. And obviously this recent pivot. And if we struggle holding 74 here, I think we're probably going to see like 73.5 today. A lot of volume down here
let's
too.
do another trade. Oh, I'm kidding.
Let's chase the short right now.
Yeah,
I know, could be a good idea, but I don't know.
it was definitely the right way to do. And this setup would have been perfect, of course, hindsight, of course, if you would have taken it closer to that broken support zone. This is one of the classic setups that we see over and over again, where price retraces. What's that? Oh, MCL back to a broken level, which now acts as resistance, and then you enter.
Yeah, and when you're doing like what we did here, we spoke about it when we did take the trade. MA Rush is really useful just as a visual guideline to have an idea of, am I really chasing things, or am I chasing the trade, especially in magnet zones and short break retraces, especially if you come to a short break retrace or a long break retrace, like this one right here, for example, a break, nice retrace, then price runs off, retraces one more time, using the MA Rush lines as a guideline of, well, am I chasing a lot? Well, at this point right here, look how far we are off of all three MA Rush lines. And obviously just looking at it visually too, that's overextended. If the retrace is going to happen, well, we probably want to be entering around in the middle of these lines somewhere. So that was like back here, over here. And even if we were chasing it way out, there's not really many good opportunities to buy it afterwards. But look, once we did come down and test the levels again around in the middle, these were also the next good points to enter if we did try to chase a breakout, for example.
Great.
Which is what we did here on this short.
Yeah. Awesome. All right, guys. So this is it for today. But don't worry, we're having these workshops once a month or sometimes a bit more often. So the next workshop will be just around the corner. And in the meantime, please don't miss out on our lunch and learn sessions. It might not be next Tuesday, but potentially on Wednesday because of a scheduling conflict, or perhaps even on Monday. We will let you know ahead of time when the lunch and learn session will be. But for sure, it also will be recorded so you can watch it afterwards. All right, guys. So with that, I hope we answered most of the questions. For those of you who I asked to reach out to me by email, I saw some emails coming in. I'm going to get to those just a bit later today, and or at the latest, because I'm in a different time zone right now. Tomorrow morning, which is the night time of your time. So, but rest assured, you're going to get your answers. All right. Great. So that's it. Thanks, Nicholas.
Thanks everybody. Yeah, thank you, Daniel.
Yeah, walking us through the setups, and thank you guys for listening, and talk to you soon. I hope you had fun. Bye-bye.